Hi there, good evening. You're tuned into Business Day right here on ET Now. I'm Ava Andabash. Let's take a look as to how the market shut shop today before we take you through the top headlines. Well, after yesterday's carnage, we seem to have recovered lost ground, but not very convincingly. We did cross 5,800 in intraday trade, but slipped marginally below that by the day's close. It was a 130 plus point rally on the Sensex, quite a bit of short covering. This is what we witnessed in the broader markets, and a firm advance decline ratio with a total turnover at over 1 lakh crores. Well, 57.96, that's how the Nifty shut shop ahead of the crucial union budget tomorrow, and 19,152 on the Sensex. Get you all the big top stories after the headlines. The economic survey says growth may have bottomed out. Says the economy would grow at a level of 6.5% compared to less than 5.5% this year. The chief architect of the survey, Raghuram Rajan, bats against a hike in tax rates and instead suggests a broadening of the tax base. Finance Minister P. Chidambaram will present the union budget tomorrow after a gap of 3 years. While the FM has made his groundwork for fiscal consolidation, with just 1 year to go for the general elections, he may find it difficult to make some tough decisions. Markets end in the green as investors cover their short positions ahead of the budget tomorrow. The Sensex ends with a gain of almost 1% and most sectoral indices end in the green. Etihad Airways pays $70 million to buy jet slots at London's Heathrow Airport. The jet stock surges 20% on hopes that the deal could be announced sooner than later. Aviation Minister Ajit Singh says there could be some minor glitches in the deal structure and hopes that the issues will be sorted soon. The country's largest lender, the State Bank of India, hikes deposit rates by 25 basis points. Chairman Prateek Chaudhary tells ET Now that the margins will not be impacted due to the rate hike. Well, to the big story for today, and just a day ahead of the budget, the Finance Minister tabled the 2012-13 Economic Survey in Parliament. His maiden economic survey, Raghuram Rajan, pegged growth at 6.1 to 6.7% in FY14. The survey went on to state that the economy has bottomed out and further reforms will help in improving the economy's outlook for the coming year. On the inflation front, the government believes it may fall to 6.2 to 6.6% in March, and it remains a key priority for the government. Focusing on all the important deficit concerns, the survey asserts that the government can rein in the fiscal deficit at 5.1%, and the economy needs to stay on the path of fiscal consolidation. FY13 tax collection will be lower than targeted, but that a function of slowdown. The survey also says that there is room for the RBI to move on policy rates, and it impresses on the need to cut gold imports and contain the current account deficit. The survey also sounded an alarm bell on the food security bill, as it will raise the food subsidy bill.
Current account deficit widened to 4.2% of GDP in 2011-12 and to 4.6% of GDP in the first half of 2012-13. Exceeding 5% in the last quarter. We have to bring the twin deficits down to reduce the scale of our external as well as our internal borrowing.
Earlier, at 5.3 this year he's going to try and contain it, and next year he's going to contain it at 4.8. I believe the markets would regard that as a fairly reasonable effort at fiscal consolidation, given that growth is so much lower than it was supposed to be.
Even if in the worst case scenario, the fact that 5.1 could be, some adjustment may have taken place, postponement may have taken place, is much better than what we would have thought, say, last week.
What the market would look for is a reduction in non-plan expenditure, particularly subsidies, also the other social sector spending and entitlements, which also brings down the revenue deficit of the government. It's really critical to see what are the methods employed by the finance minister to achieve this number, because taken in isolation, this 5.1% number means very little.
The economic survey apparently points out to a number of new measures to ease supply constraints, to get infrastructure going, to get energy going, to get the roads going. If all that is correct, if we do get an uptick in those sectors, if you ask me, we will find that the economy picks up. I am optimistic that inflation will come down. I don't think world oil prices are going to rise anymore. I don't think the rupee is going to keep depreciating anymore. So all these things which were earlier on putting an upward pressure on prices will cease to put that upward pressure on prices.
Well, straight to the action that we witnessed today then on Dalal Street, and we did manage to see a good recovery in trade, but 5,800 was not held on to. Quite a few short covering positions were squared off, and you had the Sensex and the Nifty, which managed to end higher in the session by 0.6%. Well, for the broader markets then, you had a similar momentum which did come in. So the mid-cap index up by close to 50 points and the small-cap index seeing a marginal gain of 0.2%. Realty and capital goods, those were clearly in the green today. And remember, your star of yesterday, IT, came under a fair bit of pressure, as did the technology basket. Some of the gainers for today, Jaiprakash Associates did well for itself, a good 5.5% gain. Bharti Airtel once again featured on the gainers list. You had a DLF, which also did well for itself. Some of the education stocks from the mid-cap basket really took a knock. So core education, the lowest level since April 2009. It lost out 45.8% today. Educom struck its lowest level since August 2006, 8%, and it's dropped for the 10th day in a row. Apart from that, you had Everon also, which hit its record lifetime low and was down and out in today's session. This played out for some of the other stocks like a Lovable, a Wellspun Corp. You had Opto Circuits, Jain Irrigation. So individual stocks really were beaten out of shape for the second day on the trot. NTPC was in focus. It gained as it okays investments worth 12,954 crores in 2 states as well as some projects. And apart from that, you had some of the losers in the session, which included the likes of Aran Baxi. You had Power Grid, which also came off in the session. Siemens as well as GAIL India came under a fair bit of pressure. Well, it's a crucial day for tomorrow. We not only have the Big Bang Union budget, but the GDP numbers as well as F&O expiry. Well, what is Dalal Street exactly expecting from the finance minister? Let's hear out some expert voices.
India problems are known, our current account gap, our inflation issues, our economy slowing down, absence of capex. All of those are known and they are priced in. I think what we don't know, and I don't think it's easy to factor in, is the effect on India because of global liquidity.
Markets are nervous, and so does most of the government functioning look like. The fact that the finance minister has actually put his reputation on the line is pretty clear. He's talked about the fact that you need to judge me by the budget that I present this time. So I think it's going to be a extremely challenging task.
I would think 5 to 7% is clearly a downside in this market. What the budget should signal is a willingness to consolidate the fiscal deficit and cut it over a period of time. Improvement in sentiment of corporates and the ability of the market to raise equity for some of the highly leveraged corporates.
Let's talk about the big story of the day. You had Jet Airways, which soared in trade and in fact hit up a circuit to shut sharp higher at a level of 534.7 after Etihad bought 3 of Jet's parking slots at Heathrow Airport for $70 million. Etihad, remember, has been in talks with Jet to buy a stake in the airline, and they also said that they do remain in discussions with Jet about the further investment in the airline. Pranay Jain now joins in with the latest details. Pranay.
Well, ET Now was first to report that Etihad has made payment of $70 million for Jet Airways' 3 parking slots at London's Heathrow Airport, and this concludes the airport slots deal on sale and leaseback terms. Also, deal strengthens the code sharing pact, and the sources say that the stake purchase deal of Etihad in Jet Airways, which is planned at around 24%, is valued around $400 million, as opposed to what was earlier reported in the media around 1,600 to 1,700 crores at 750 to 770 rupees per share. So the deal is definitely not done yet, but this is one of the many steps that takes the deal closer to getting finalized. And this was cheered by the markets as a result of which the stock took off on the bourses and was flying as high as 20% from day's closing yesterday. Also, a check on the price performance says that the stock has surged 48% since first media reports came out on the talks between Jet and Etihad over the flying alliance. So there are some synergies between the airlines that the investors and the shareholders are really positive about, which include the long-haul flights. Possibly Abu Dhabi could become the next global aviation hub for Jet Airways. Also, this will bring in better fleet acquisition for Jet Airways. The refinancing may happen at a better rate due to the strong financial hands of Etihad Airways, and it will also give it improved access into fast-growing Middle East markets. So this will clearly says that Etihad is likely to become the first foreign airline into the Indian airline once the FDI norms of 49% were announced in September.
I'm not aware of this transaction. All I can say is that talks between them, there are some minor issues that they are discussing, and I'm hopeful that it will go through. It's between Jet and the Etihad. I'm not a regulator or anything, I'm a facilitator.
Well, thanks, Pranav, for those details into the banking space. And at a time when interest rates in the system are headed down, the country's largest bank, SBI, has raised deposit rates on some buckets by 25 basis points. Let's get a sense on what exactly led to this move. Anirudh Ghosh from our banking team now joins in for more. Anirudh, why has SBI raised its deposit rates, and what kind of an impact will this move have?
Well, Avan, there are two main reasons as to why SBI went ahead for this move. The first reason, of course, is that State Bank was holding on to possibly the lowest deposit rate in the industry. And of course, they were doing this deliberately because they didn't want to grow their deposit base through the past couple of quarters. Remember that they were pretty comfortable as far as their deposit growth was concerned. They held on to about a 16% deposit growth at a time when most of the industry was really suffering from very low deposit growth. So clearly, throughout FY12 and 13, they've been having a good deposit growth, so they deliberately slowed down their deposit growth towards the end of FY13. Of course, going into the new financial year now, they've decided to raise that rate, and also remember the fact that the small savings rate at this point of time is at 8.5%. That incidentally is the same rate at which SBI was holding on to its deposit rate for the 1 year to 5 year bucket. So clearly that rate has now been raised to 8.75%. They're looking at attracting more deposits as they go into FY14, and of course they aren't expecting this to have too much of an impact on their margins, given the fact that they haven't touched any rates as far as their senior citizen offering is concerned. In fact, we did speak to Pradeep Chaudhary, Chairman of State Bank of India, a little while earlier on the phone line. Let's listen to what he had to say about this particular rate hike that they did.
Our rate was from 1 year to 10 years, all buckets, the rate was 8.50 for other people and 9% for senior citizens. So this rate was significantly lower than all other banks. So we have tried to bring it in line with other banks. We have got an advisory from the government that the premium for senior citizens need to be lowered. So we are lowering the premium for senior citizens to 9% without changing their effective rate. But the rate for others, non-senior citizens, would go up by 25 basis points.
Many thanks, Anirudh, for giving us those details. Our retailers have tried hard to kick off 2013 on a good note, enticing customers with heavy discounts. But now that the sale season is almost over, how is the year ahead looking? Krishna Kumar finds out.
After a dismal 2012, can the new year change the fortunes of retail companies? Well, not quite, say key players. What one can expect at best is a moderate same-store sales growth of around 8%, and that too only for those who are smart and efficient.
I don't think it is looking like a game-changing year as of now. It is looking like a better version of 2012. That's what I can see right now. And unless and until large action points happen on the FDI side or large action points happen on the service tax on rent side, I still don't think that is going to be a fast action year for sure.
The retail industry is learning to live with the new normal when it comes to consumer demand. Most players admit that it will be a long time before they can see the kind of growth levels that they witnessed in 2008.
I don't think that the consumer sentiment is bad. I think it's fairly positive, but it's not as wow as earlier. So I think we'll have to live with this. What I'm trying to say is, if as an industry we are expecting some kind of major change either in terms of sentiment or in terms of consumption pattern, I think we are mistaken.
And with big volumes hard to come by, the winners will be those who stand tall, just like these mannequins in an already crowded market. 2013 could well be the year that separates the men from the boys. New marketing techniques could keep the counters ticking, but cost savings will be the clincher when it comes to keeping bottom lines intact. Krishna Kumar, ET Now, Mumbai.
Okay, that's about all the time we have right here on Business Day. Thank you so much for watching.